For years, Jiahua Capital has focused on essential, high-quality, and affordable consumer sectors, especially infrastructure-related consumption, rather than consumption upgrades. Looking at current social issues, the basic livelihood needs of ordinary people have not been fully or effectively met, so economic cycles have little impact on the areas we focus on. Jiahua Capital has been established for 16 years and has indeed gone through several cycles, experiencing various so-called boom periods and opportunities, such as the real estate boom, the internet boom, the social e-commerce boom, and the AI boom. We face challenges, but firmly believe in one principle. Advanced economy's development model will shift from production to consumption. This is the greatest source of confidence and strategic resolve for the Chinese economy. In high-quality development of consumer services, this is the principal contradiction and greatest opportunity of our era. We have such a large demand for employment, so many small and micro enterprises, and such enormous unmet needs. The consumer sector is broad enough, the cycle is long enough. It's a classic long slope with thick snow, a track worth dedicating ourselves to. The rest can be entrusted to time. Do things right and do the right things. Consumption is an industry where sufficient accumulation of knowledge leads to the ability to reuse skills, and it is also a sector that relies heavily on insight. We are not just a fund, we are also industry experts. Our goal is to become the number 2 employee in a company, an external CEO, and a business partner. Consumer investment is also the most challenging, because you're investing in industry leaders. Once these companies establish their brands, they start generating profits and positive cash flow, so they no longer simply need money, and investment arbitrage loses its effectiveness. But what do they really need? They need the level and capability to co-manage the business. After all these years, we wouldn't dare say we've become big. We just say that we've survived and mastered a unique way to stay alive, developing our own investment style and cultural philosophy. Only by taking action can we gain something. While earning legitimate profits and returns, we strive to create greater value and win respect for our partnership opportunities and professional dignity. Consumer entrepreneurship has entered a new era, and the first thing is that the wave of new consumption targeting the middle class has come to an end. I believe that in the future, China will be similar to Japan, a market with insufficient effective demand. Studying the improvement of purchasing power is a long-term issue. Japan experienced its lost 30 years and only started to slowly recover and grow last year. Given the size and structure of our economy, the challenges we face are even greater. The demographic dividend is gone, the land resource dividend is gone, and we have entered an era of stock competition. With insufficient effective demand and declining per capita purchasing power, economic expectations have shifted from positive and optimistic to relatively conservative, and everyone is tightening their wallets. So whether it's new consumption or middle-class consumption, I wouldn't say it will be completely wiped out, but the pressure will be significant. That's why Jiahua Capital has basically not invested in these areas in the past. In the future, we may enter a low-desire society. In the past, we built up large factories, big brands, and extensive distribution, but in the future, consumers will emphasize individuality and their own consumption values, such as simplicity and frugality. They won't blindly pursue brands or be willing to pay for new forms of consumption without careful consideration. The mainstream trend in consumption will still revolve around basic necessities and livelihood-related spending. Although consumer demand is currently declining, it hasn't affected the business of Nongfu Spring, nor has it had a significant impact on Jiahua's portfolio companies like Jinmeilong, Zhongping Energy Drink, Bobby Food, or Ganbu Underwear. Why is that? Because our main investment focus has always been on high-quality, reasonably priced essential goods and livelihood products. These are necessities, and we strive to create consumer benefits and surplus through exceptional value for money. When China follows a development model similar to Japan's over the next 20 to 30 years, consumer behavior will undergo a dramatic transformation. We need to proactively gain market insights and adjust investment strategies to align with the needs of the times. You can't just look at Beijing, Shanghai, and Guangzhou to determine mainstream consumer trends. Major market is the 600 million low and middle income and 900 million livelihood market. Providing good products that meet the essential needs of ordinary people is what truly matters. In reality, the per capita purchasing power of the middle class is not actually that high. Now that property prices have fallen, they have mortgages, car loans, and possibly other consumer loans as well. In fact, they are a vulnerable group as soft middle class. They are more inclined to save money to pay off their mortgages and may reduce their spending in line with future expectations. All these factors will pose significant challenges to new consumption. No matter the economy fluctuates, the impact on essential, high-quality livelihood products is minimal as they revolve around basic needs. After all, you can't just stop eating or drinking. What we invest in are things like 1 yuan steamed buns, 3 to 5 yuan drinks, 20 yuan fast food meals, and 60 yuan proper dinners. We need to find the greatest common denominator. People can't go without drinking water. Why does Nongfu Spring have such potential? If everyone drinks 2 bottles a month, it becomes a market value of 500 billion yuan. If the average goes up to 4 bottles, that's even more incredible. Recently, Nongfu Spring's founder Songxiangqian made his 3rd trip to safeguard China. Basic livelihood needs make up the largest market because they're supported by the biggest group of consumers. The idea of essential needs combined with high-quality, high-priced livelihood products has basically become a consensus topic, but it's very difficult to invest in brands and large-scale consumption in this category. As an investor, by the time you notice these companies, they're already huge. Only industrial investors can help them grow and gain some opportunities to contribute. To truly help them and grow together, it requires patient, long-term investment. How Jiahua Capital invested in opportunities. We began focusing on essential, brand-driven consumption with attention to the fast-moving consumer industry. Secondly, we've gained enough experience like learning and capability building. Good companies are very selective. They seek a business partner, and money isn't the product. Fundraising is more than just raising capital. It's about entrepreneurship, breakthroughs, integration, and drawing inferences. There truly is nothing new under the sun, but starting from a low point and then bursting forth with powerful vitality goes against human nature. It tests one's patience and perseverance even more. Arbitrage and short-term thinking have never been companions of greatness. Though entrepreneurial achievements in consumption upgrades haven't been ideal recently, some companies, like Genki Forest, have performed well. Their product strength is solid, and market insight surpasses traditional consumer companies. For example, sugar-free sparkling water has objectively created a new category in China's soft drink market. It has also mastered social e-commerce capabilities, thoroughly understanding new channels, demographics, and distribution paths. However, their development faces challenges. As Mr. Tang said, Genki Forest needs time, and more importantly, it needs to become a traditional FMCG company by strengthening its production capacity, supply chain, channel management, and other core competencies. For a great company, shortcomings largely determine the starting point, but strategic capability, operational excellence, and perseverance to learn from and employ talent truly determine its future. A company that is centered on the consumer and remains rooted in the lifelong value of its users within the triad of people, products, and scenarios possesses a structural competitive advantage. This high-level competition of character and mindset, though easily explained, is difficult to truly practice, aligning knowledge with action. Today's business competition is a contest of entrepreneurs' cognition, character, and altruistic spirit. To be a long-term winner, cultivate inner strength by addressing weaknesses, driven by an altruistic spirit. This transformation may hinder a company's short-term development and create obstacles, but in the long run, it is high-level wisdom with careful planning. In new consumer goods, some create opposition. An ice cream brand claims it's not selling ice cream. But no matter what methods, persona, or emotional value you convey, you're still selling ice cream. A good product speaks for itself. The market rewards honest, trustworthy, and innovative. Most people are simply leveraging the capabilities of social e-commerce, using the methods of MCN, or tapping into new channels. New consumer goods and traditional consumer goods are not inherently opposed. There shouldn't be too much market-making hype or unnecessary noise. We're all in the same industry, all working in the consumer sector. Traditional consumer businesses should learn from innovative consumer brands how to leverage the digital economy, MCN, the traffic economy, and digital-driven rapid growth. New consumer brands need to learn traditional skills like production, R&D, and supply chain management. We each have our differences, but we grow together. New and traditional consumer sectors are not fundamentally opposed, and there's no need for animosity. We're all in the same industry, all working in the consumer sector. Why are new consumer brands losing momentum? Because most new consumer companies are essentially channel-driven businesses. Strictly speaking, they are not modern enterprises with complete industrial capabilities. For example, certain dairy brands, tissue brands, ice cream brands, or pastry brands, they rely heavily on outsourcing for R&D and production. They are not vertically integrated companies with comprehensive competitiveness and strength. Instead, they typically excel in one area, such as leveraging new channels, but are not as strong in production, logistics, warehousing, or distribution. New consumer companies are flashes in the pan. They rely on beautified packaging, emphasize cost-effectiveness or affordable alternatives, focus on emotional value and functional iteration, and use pain point marketing. They put efforts into marketing, exploiting human weaknesses to gain short-term advantages. All business is rooted in interaction, and true value comes from the dividends of winning people's hearts. Secondly, every consumer product and service industry has its inherent life cycle. Only large enterprises can iterate and refresh themselves. This is also the secret behind why traditional, established brands are more competitive than new brands. That's why many traditional large enterprises, though not outspoken, win out in market competition. In the future, it will be common for consumer companies tied to people's daily lives to go public. China's hidden champions are kings of their regional economies and sector leaders. China's consumer market is vast, with over 2,800 counties and nearly 30,000 towns. Per capita purchasing power is uneven, and regional consumers have preferences.